Hey guys, what's up? It's Frank here from Altcoin Buzz. So today we're going to cover the one and only Bitcoin. We're going to look at previous bear markets, how long they lasted, and how much Bitcoin retraced by. We're going to look at all the support levels. Of course, we did cover a lot of this in a video about a month ago, so feel free to check that out. But we're going to go a bit more in depth today, not only on the technical analysis on the longer time frames, but also on the shorter time frame. We're now seeing an uptrend on the daily chart, which is quite exciting. But of course, we're going to keep this all in perspective by also looking at some of the fundamental factors affecting Bitcoin, because right now a lot of the international markets are highly correlated, and a lot of the macro factors driving those markets are related to the Fed and the inflation rates and the interest rate hikes. So we're going to be looking at some of that news. So stick around until the end of the video to find out where I think Bitcoin is likely headed over the coming weeks and where I think it's headed over the coming months. Now, for those of you who don't know, Altcoin Buzz is first and foremost a crypto investment research company, and we have been providing you numerous 100x returns since 2017. So if you want to get in on that action, join our Altcoin Buzz Access group, where we document up-to-date research covering undervalued altcoin gems, NFT minting opportunities, and our portfolio strategies. So click the link up above or down. So click the link up above or in the pinned comment section down below to take part in the action today. Also, please don't forget to like, subscribe, and click the notification bell so that you don't miss any future updates. And finally, please note that none of this is financial advice. Okay, so before we get into the technical analysis, I'm going to cover some of the recent news. So the Fed sees more restrictive policy as likely if inflation fails to come down, according to the minutes on this article from the 6th of July on CNBC.com. So for those of you who don't know, inflation has been very high over the past year. It's been closer to 10% than the 2% which the Fed aims to have it at. And of course, when the inflation is high, the Fed generally increases the interest rates to bring the inflation down. Increasing interest rates makes it harder to borrow money and therefore harder to spend money. And when you spend less money, then of course the prices of products don't increase as rapidly. Now, what makes this an interesting and delicate situation is that we are currently on the brink of a recession. So they need to fight the inflation, even though it means slowing down the economy. So it makes it quite dangerous, because if they increase these interest rates, then people can't borrow as much, and that typically makes it harder to recover from a recession. That being said, we are not in a recession yet. Still, according to this article, raising benchmark borrowing rates by 0.75 percentage point in June was necessary to control cost of living increases running at their highest levels since 1981. Gross domestic product in the first quarter fell 1.6% and is on pace to decline 2.1% in the second quarter. And this, of course, would put the economy in a technical, though historically shallow recession. So no, we're not yet in a recession, but if the trend continues, we will be in, at the very least, a shallow recession. Now, the good news for the economy, of course, is that we had strong wage and job growth, according to a report published here on the Seattle Times on the July the 8th, so just a few days ago. Now, this is good for the economy, but it's actually not very good for cryptocurrency, at least in the short term, because when the job growth rises, when unemployment decreases, it gives the Fed an excuse, or a reason at least, to increase the rates. And if the Fed increases the rates, then of course it makes it harder to borrow, and it makes the whole economy slow down in general. So in summary, this is good for the economy, but not so good for stocks and cryptocurrencies in the short term. Now let's go to our technical analysis. We're here on Bitstamp on tradingview.com, looking at the BTC USD chart on Bitstamp, since it has the most data. It goes all the way back to August 2011. And I'm here currently on the log chart, and you can see that we have this diagonal support line, which I mentioned in the video about a month ago. I mentioned how we may very well find support at this diagonal support line. And indeed, we found support at the $17,592 level. And there is some potential still that we will hold this support. Now, my guess is that we will actually break this diagonal support line for a few reasons. The first reason is that we have seen multiple retracements in the past, ranging everywhere from 74 to 86% retracement. And currently we have seen a 74% retracement. So we do still have the potential to go potentially all the way down to 86%. And that, of course, would take us down, let's say 84%. That would take us to this previous major support, which I mentioned in a previous video, approximately the $11,000 level. We'll get to the specific levels later on in the video. But the major reason for this, I think, is the macro factors. The macro factors are that you pumped all this money into the economy because of COVID. So, of course, the inflation rose, and now we're trying to decrease the inflation, but that means increasing the rates, and it's very likely that the rates will continue to increase, or at the very least not decrease, over the coming many months. So my personal prediction is that we will not see a bull market for at least another 6 to 9 months, and most likely a year. And if that's true, then we'll also likely see a new lower low. Now, another factor to consider is the fact that we have currently seen almost 8 months of a bear market, and the last several bear markets that we had lasted a little bit longer. So the most recent bear market before this lasted 8 months, so admittedly that's the same amount. That was quite a short one. But then we had another bear market here which lasted 11 months. This was back in 2018, and the bear market of 2013 lasted 13 months. So I suspect that this bear market will last at the very least 10 months, if not even longer. And of course, what often happens when markets mature is that the trends take longer to actualize themselves. So the bull markets will last longer, and the bear markets will last a bit longer as well. Now, when it comes to the daily time frame, I'm here on Binance since they have more volume than Bitstamp. We are seeing technically an uptrend here. We had a high on the 26th of June, then we had a low on the 30th of June, and now we have a higher high. So we do have somewhat of an uptrend forming here on the daily chart. And this is why I personally think we will actually see further upside over the coming weeks. Despite being bearish over the coming months, I do think that we will actually retrace a fair bit. And one reason for this is the weekly time frame. So on the weekly time frame, if we look at the RSI, you can see that we're oversold. And this is very rare for Bitcoin. If we go back to Bitstamp and go to the weekly chart, I'll show you how rare it is for Bitcoin to be oversold. So over here you can see Bitcoin historically has spent very little time in the oversold area on the RSI. So I think it's very likely that we will actually see a rebound here, a short rally taking us potentially up to $28,000. This is not unheard of in bear markets. And certainly we can see that the RSI is ticking up now, so a sign that the bearish momentum is slowing down. That being said, of course, we do need to be watching out for the support levels to maintain this uptrend, because if we break this daily uptrend, then of course bears will be in full control again. So the first support level, of course, is the previous daily low at the $18,632 level. If we break that, then we have the previous weekly low to watch out for, which is the $17,613 level. And if we break both those levels, then we have to look lower, of course. And actually for this, I'm going to zoom out to the weekly time frame. So on the weekly time frame, If we add in our VRVP here, you can see that there's some potential for us to find support at this $13,800 level. That was a previous high, more or less, and you can see that we've had a fair bit of price action just at the top of this zone. But of course, if we break that, and it's entirely possible that we do, especially if we enter a recession, which is not out of the question at all, then Bitcoin could easily make a retracement similar to the retracement it has seen in the past and see up to 86%, and that would take us down to the $10,000 level. Now, I don't think it's very likely that we get to that level, but I just want to make sure that you're aware that Bitcoin is a highly volatile investment, and of course this is not investment advice, but I can say that the history of Bitcoin has shown that Bitcoin is capable of these type of retracements, and it's important to be prepared for the worst case scenario. Hope for the best, but prepare for the worst. That being said, I do think it's more likely than not that we will break the $17,500 level eventually, and if we do, the next very likely support will be at this $13,864 level. Now, when it comes to resistance, the first one is the previous daily high at $22,537. If we break that, if we zoom out here, you can see that there is somewhat of a liquidity gap. And this is why, as I suspect, that we could very easily reach $28,000 if we break this resistance, because there is very little resistance up ahead. That being said, if you were to take profit at one level above that, it would likely be wise to take it at the psychological $25,000 level. But thereafter, the next major resistance is up here, let's say the $28,400 level. So in summary, the support is the 18,632, the 17,613, and the $13,864 levels, and the resistance is the 22,537, 25,000, and $28,406 levels. So yes, in conclusion, Bitcoin has fallen drastically on the weekly time frame. The bears do seem overextended. The RSI is oversold. Historically, it has not remained oversold for very long. It has actually currently been in the oversold area longer than we've ever seen it before. So the bears are overextended, and therefore it is very likely that we see some sort of relief rally. There is very stiff resistance up at $28,000, but very little resistance up until that level. But because of the macro factors, because it's likely that inflation won't decrease that rapidly and that therefore rates will stay high, the lending and borrowing rates will stay high. Because of that reason, and because of the reason that we may enter a recession at some point over the coming year, it is wise to be safe, to be prepared for the worst for Bitcoin. But what I'm personally doing, again, this is not financial advice, I'm personally dollar cost averaging in over the coming year. I'm very happy at the current prices, and anyone who is a long-term investor in Bitcoin should be happy at these prices based on how much Bitcoin has retraced. Of course, that's just my personal opinion. Let me know down in the comments below. What do you think? Is Bitcoin at a fair value now? Are you dollar cost averaging in? What price of Bitcoin are you looking to get in at? If you enjoyed this video, don't forget to check out our other videos. We cover fundamental analysis, technical analysis, cryptocurrencies, altcoins. That's what we talk about every day. So feel free to subscribe to the channel. And with that being said, I'll see you in the next one.